Hey, Steve Saretsky here. This is the Canadian real estate market update with a particular focus on Vancouver. If you're getting sort of value or entertainment out of these videos, all I ask that you hit thumbs up and subscribe. Questions, comments, put those below. Just want to do a little bit of housekeeping and a little questionnaire for you before diving into this week's video. If you're a developer, we are expanding our services. We're doing a lot more consulting, narrative, appraisal reports, etc. So if you're a developer looking for some consulting work, we are doing a bunch of that. So you can, if you need that kind of service, Steve at Steve Saretsky, send me an email, steve at stevesaretsky.com. But also just wanted to touch on, I thought a lot about this channel moving forward. Obviously, when we started this channel, we had the huge run up in home prices. So there's a lot to talk about. We had the euphoria. Clearly now we're on the down leg. And at some point, when this market does bottom out and start to move sideways, it probably won't be a very interesting time, at least for a number of years. So it's something I've thought about moving forward, about how to, when that time should come, how do you sort of keep the channel going? So if you have any thoughts, comments, things that you might want to listen to or watch, obviously I like to discuss things that I'm confident and that I know, obviously Vancouver real estate being one of them, Canadian real estate, a little bit of macro in there. So maybe, a little bit on the US housing market, real estate in general is the main focus, because I'm in the trench basically every single day dealing with that. But would love your input on that, on any thoughts or suggestions, things that you'd like me to maybe focus on here moving forward. But without further ado, I wanted to get into sort of the construction and land side of things in terms of what we're seeing in the Vancouver market and nationally as well. I posted this chart from Capital Economics on Twitter, and I'll post it now. So basically, shows the GDP, construction GDP as a percentage of GDP, and the increase in the construction workforce. So basically what you're seeing now is you're seeing investment really drop off in the construction side, yet you're seeing labor into the construction side continuing to increase. So it's either really bad StatCan data or very temporary blip that is clearly going to suffer a substantial correction. And that was my thought. So I posted that on Twitter and actually had a big bank account on this suggest to me that maybe developers were front running for the next housing boom, which was quite the interesting comment. Granted, we just had the housing boom, so I'm not really sure where he was going with that, but interesting to sort of see where some of the other guys are thinking. But my thoughts here is looking at the Vancouver housing market is what you have basically is units under construction is basically still at record high. So everybody's trying to work through their existing supply of homes. That's keeping people employed in that sector. But we have basically construction work in the single family housing market is completely dried up, as people no longer build spec homes because there really isn't any demand for that at this point. You have basically contractors starting to rework and rejig some of their contract negotiations with the developers, because the developers are saying, listen, we're going to side on this project. We can't make the numbers work. So the contractors are going back and renegotiating their salaries. So they're starting to take a hit there. So, from a developer standpoint, you're starting to see housing starts really slow down. And that's really going to start to feed through the system. So basically, if you understand it from the lens of a developer and what they need to make it work, basically you're looking at, pre-sale condo market where you have the fewest condo sales in basically 20 years. And you still have these elevated construction costs because of this housing boom. Everyone's demanded higher wages. And you have basically elevated land prices because a lot of sellers of land are still sort of in the old universe where they're demanding peak prices. And so as a developer, you're trying to make a project feasible. So you're looking at a piece of land and saying, well, I'm going to have to buy it for X and my construction costs are Y. That means I have to pre-sell it for this price. And unfortunately, the pre-sale market has really dried up. We saw the pre-sale absorption rate, I believe it was in April, drop to 28%, which is well into buyer's market territory. So basically what's happening is you can see the drop off now in land sales. So if you want to look for across Metro Vancouver, Q1 land sales fell 54% on a year-over-year basis. So the developers are now pulling back. So basically this is, we're going to start to see land prices come down even more. And it's going to be interesting to see how developers move forward here. But if you're looking at that, again, we're going back to the initial conversation, which was that construction and labor force is still continuing to grow, despite not only the Vancouver housing market, but the national housing market slowing down. So I think if you're in the construction space, if you're a tradesperson or you're a general contractor, it's likely time to tighten the belt, because in my opinion, there are layoffs coming. And, Vancouver, we're already starting to see that, particularly, as I mentioned, in the single family space. But we will continue to keep an eye on land sales here in Metro Vancouver. Keep in mind that these land sales are really a lagging indicator because there's such a long, drawn-out period for developers to do due diligence and remove subjects and actually close on this land. So these Q1 2019 sales are actual closings in land titles, so down 54% from last year. So moving forward, I suspect that you'll see land sales continue to be weak, given what's happening in the pre-sale condo market and in the resale market, with condo sales being basically at 20-year lows. And just moving forward. So where does that play us all out? Just looking at some of the other things I've been kind of keeping an eye on is the residential mortgage credit growth. I mean, that still continues to remain benign. If you're year to date, CIBC and Bank of Montreal have negative mortgage growth, negative residential mortgage growth on a year-over-year basis to start this year for the first quarter. So, hard to really propel housing and kickstart another construction boom when loan growth is negative from some of the big banks. Which really takes me to the national housing market. I think that if you look at the April numbers, you basically have right now a divergence between the West and the East. So if you look at the West, Vancouver, Calgary, Edmonton are basically reporting multi-decade lows in home sales to sort of start the year. And then you have sort of a little bit of a resurgence or still some strength to the east. Obviously, Toronto, we've noticed, has sort of basically, in my opinion, is stabilized and is kind of moving sideways. And then you have Montreal and Ottawa still exhibiting growth in those two markets. So you really have this divide between the west and the east. But overall, despite sales figures being up on a year-over-year basis in April, still a pretty weak national housing market where if you look at the national home price index, it was still negative on a year-over-year basis, just slightly in April. So something to keep an eye on, obviously, that's kind of unprecedented territory for a housing market. But that remains to be the thesis. So, this video is primarily about the construction side of things. I think that you're going to see layoffs in that sector once the lag effect of developers working through, the national housing supply under construction is at record highs. It's never been this high. So there's still a lot of employment there with people trying to work through this existing supply. But we are starting to see housing starts, which is more of a leading indicator, have started to drop off. So I suspect the construction sector will start to see some layoffs in that space. And obviously that will be a drag on GDP. And of course, the unemployment rate, which is basically still hovering at 40-year lows. So anyways, that's all I got for today. Hope this helped. Otherwise, see you next week.